Back to the phones. Here is Andrew in Calgary. Good evening.
Hello, Mark and David. Thank you very much for taking my call. My question tonight is about cash. And David, you've chosen cash as a top pick at times in the past. And I'd like to know, does the amount of cash one should hold in an equity portfolio vary greatly between different persons and their different goals? And also, what are the key principles that a given investor should look to when deciding how much cash there should be percentage-wise in his or her equity portfolio? Thank you very much. Goodbye.
Always a thoughtful question from Andrew in Calgary.
Andrew, it's a very good question, and it's a tough one to answer in a short period of time. In our case, you know, we work at being tactical. So in a good environment, we want to be invested. We want to focus in sectors that the market cares about, and we want to take advantage of strength when we can find it. When we get into a deteriorating market, as you know, we have stop losses on our positions. When a market's deteriorating, I don't know how long it's going to go through a period of weakness for, but as we get stopped out of positions, our cash position grows because we don't tend to reinvest in a falling market. So now we have certain tools that we use to help us identify ultimately some entry points. But it's a sort of a dynamic process. I think you always should have a little bit of cash because it gives you opportunity. You know, if something you find something that really makes sense and it's really timely, you have an opportunity to make an investment. In a difficult market, what cash does is it provides a cushion. You know, so as you go through a prolonged decline, it's not the first month that hurts you in a decline. It's month 3, 4, 5, 6, when really people start throwing in the towel, the decline accelerates and it starts costing you a bunch of money. If you've been using stops and not reinvesting through a falling market, your cash position builds and creates a cushion. So, you know, there's a bit of a long-winded answer to that, but I think cash is a very important component of a portfolio. I don't think it's so much as related to age. I just think it's more market-related and being able to be tactical and opportunistic when the time comes.
Right, now you laid that out nicely, and I've got a good image of what you're talking about for sure. Here's Alex in Thunder Bay, Ontario, with a question for David. Go ahead, David, or Alex.
Hello, David. I think my question is probably a little passé. I'm wondering about potash. I've been owning it since pre-split at the upper end of the range, around $59, and I'm just wondering if I'll have a chance to get out of it before BHP eats their lunch. And I guess I'll just hang up and listen to your answer. Thank you very much.
Alex, you know, of course, potash is one of those companies that lots of people care about because it did have such a tremendous run-up going into 2008. And you know, people have been looking to make some money back.
Yeah.
Seasonally, we're headed into a period that's tougher for the agriculture stocks. They tend to do better spring and through into the summer.
Right.
I think that one of the risks right now of the rally that we're in is that people all decide to jump right back on the stuff that worked in the last rally. And I'm not 100% convinced that that is what's going to work. I would tend to be more interested in reducing exposure to resources through the course of this fall, and you might have very well another good month or 2 months in front of you to do that. But I think that when you look at what's going on in Europe and when you look at what's going on in China, it's likely that the economic data is going to be a little mushier next year, and you probably want to be in more defensive positions. Some would say agriculture is there. I would say that the charts don't set up to look like it's a you know, big long-term rally coming in front of us.
And do you get the sense, David, that there are still a lot of potash investors who got caught in 2008 at a much higher level and watched it tumble down to whatever it got down to during the crash?
And they're waiting for the same run to come back, but very often a group that leads the market for a period of time and then goes through a big waterfall decline can take a long time to repair itself enough to have a long rally coming out of that period.
Yeah, so that's going back 3 years or so. Let's take a short break here. A reminder, though, you can get top and past picks sent straight to your inbox. BNN is doing that each night, sending out analysis as well from our roster of guests on Market Call tonight and Market Call. Go to bnn.ca/subscribe, and you can sign up for the nightly newsletter.